In this video, we're going to look at the NASDAQ 100 index, what it is and why it's so popular with traders around the world. Hello, I'm David Jones from Capital.com, and this is the latest in our series of looking at popular markets for traders all around the world. This time around, we're going to focus on a US stock market index, and we're going to take a look at the NASDAQ 100. We're going to look at what it's made up of, how does it move, and why is it so popular with traders. Let's get started. So let's take a look at what is the NASDAQ 100 index and why is it so popular. So the NASDAQ 100 is made up from the 100 largest non-financial companies, and that's really important, that are listed on the NASDAQ exchange. It is often confused with the NASDAQ composite. That's the one that is commonly referred to as the NASDAQ. But this one, the composite, includes every company listed on the NASDAQ exchange. So going back to the NASDAQ 100, this exclusion of financial companies gives it a very different feel, I think, to the likes of the S&P and the Dow Jones, with the NASDAQ 100 more biased towards technology. And the reason it appeals to traders is because of the daily volatility we see on this index. So how can you trade the NASDAQ 100 with Capital.com? You can trade contracts for difference, CFDs, on the NASDAQ 100. Now, you may be familiar with CFDs, but they let you trade using leverage. So what this means is a small amount of money can control a much bigger financial position. So in effect, you're getting more bang for your buck, but of course, you're having the opportunity to magnify profits, but that also means you're magnifying losses as well. So it's very important to use risk controls such as stop losses to manage the downside. With CFDs, you can trade markets in both directions. So if you thought the NASDAQ 100 was going to rise, you could buy using CFDs and the CFD would track what the index is doing. Or if you thought the NASDAQ was due a sell-off, you can short sell using CFDs and position yourself to try and profit from a fall in the price of the NASDAQ 100 index. Let's take a look at some of the moves in this index. If we went back to October 2018, the market was trading just above 7,700, slid really heavily into December, down below 6,000, and then has bounced back up to 7,800. So plenty of swings there. Let's take a look on a shorter time frame. So this is the last couple of days, and just over the last couple of days, this market has gone from, 7,600 to trade down towards the 7,300 level. And it's this sort of volatility that traders really like, which is why the NASDAQ 100 is so popular. So you can see the NASDAQ 100 is quite different from the likes of the S&P or the Dow, because for a start, it's excluding all of those financial stocks. So it's got a very different mix. You can see from the volatility why it's so popular with traders. There's seldom, a dull day or even a dull week, depending on what your time frame is. And traders will use contracts for difference to trade these sort of markets, and the reason for that is you can trade the market in both directions. So if the NASDAQ 100 starts to slide, you can position yourself to profit from a drop in price, and you also have leverage. And as I said when we were going through the information there, leverage does cut both ways. You have the chance of making more profits, but of course, hand in hand with that goes the risks of increasing your losses when you're wrong. So it's really important to use risk management controls such as stop losses. But you can find out more about all of that and contracts for difference in general by going to the Capital.com website. We'll start wrapping things up there. So for this quick overview of the NASDAQ 100 and why it's so popular with traders, we'll leave it there. So from me, David Jones and Capital.com, good luck with your trading.